Welcome everyone to the Kindle Report. A little more on time tonight. Appreciate everybody showing up. Anyway, wow, talk about watching paint dry after what we saw last week, up nearly 6% across the board. And get a day like today. Somebody pointed out, you stole my punchline. We didn't even hit S1 and R1. We fell short of both of those on the S&P anyway. So, yeah, quiet day to say the least. And this whole week, I mean, it's like there's no data coming out, nothing really. The biggest event is, weekly claims and continuing claims on Thursday. There's really nothing coming out here. Just as I'm mentioning that trade balance comes out tomorrow. Who cares? 60.1 billion. Consumer credit coming out. No one cares. 9.6. But it was interesting. This number did catch my eye. Is it's expected to be 9.6 billion, but the previous was 15.6. So that's an interesting drop in numbers in 1 month. But hey, we'll see. We'll see what it all means. So, not as sparse as it is. I'll show you this is my notes for tonight, right? So, not a lot. I'm trying to schedule maybe a couple of things. So before I get into more details, I just want to mention today's Monday, we got Tuesday, Wednesday, and then Thursday's the seminar. Just remembering that Wednesday night will be the final video for YouTube. Then I'm out next week. Some folks think I'm on a vacation. I'm actually not. I'm dealing with a major life event with a family member. So I'm going to be, so if you want to, if you're of that, whatever you do, if you want to give me some prayers, I'd appreciate it. So it's a big deal. So I'll be gone all week, and we'll see. Hopefully everything goes as we hope it is. So, but the seminar, I knew I was going to have some downtime coming. So this is why I'm pushing this seminar. And it's really coming along, although I will tell you I'm going to be honest, because that's what I do. I'm still piecing together. Day 2 is actually fairly easy, but day 1 is really important. So let me just go off on this for just a minute. So on day 1, we're starting through just really, there's an old article that I wrote back in the 90s called Who Wins and Why. I'm going to go through the psychology of everything sets up, and I'm going to walk in from that to how to overcome emotions. And then from that, we're going to start working on trade setups and building all types of different structures around trading and all that. So all of Thursday is going to be on that stuff. And then in the first half of Thursday, the second half of Thursday, there's 4 hours. The second half will be on really going through the indicators that I use and going in to some more in depth than what the videos that we released with the indicators do, but more looking at them from a suite of things to combine the thought process. Friday, we're going to start, so we go 4 to 8 Eastern time. On Friday, we start at 1 p.m. Eastern time. There's still going to be 3 hours of trading, so I'm going to start off with day trading techniques and things on Friday. Then we go into more of swing trading and different types of trades. And then we kind of go into analysis, doing multivariant analysis and putting this all together to plug into ultimately your thought process. It's what I do every night, is when I'm going to go through this whole breakdown and the thoughts behind all that. And then at the end, we'll summarize everything, and we're recording it. Hopefully there's no glitches there. If there is, I'm going to have to fill in the blanks, because the plan is that you will have recordings. We have a website that we'll be releasing that has all the recordings. How long is it going to take to get the recordings together? I don't know. There's going to be a lot of chopping and cleaning and all that. So I'm hoping within a couple weeks of the event that we'll have this out. I'm going to be pretty distracted. I have folks lined up to deal with this, so I'll be able to interact to some level, but yeah, so that's the plan. That's the seminar, and the goal is to really give you folks some real structure. I'm basically giving you concepts on wave tech that I developed back in the 80s, all the techniques. I'm not going to do everything I could show you because it would take me days and weeks. So I'm hoping that out of this will get us to a point of actually getting really focused on other types of techniques, ultimately getting into portfolio management and those things. I have a high level expertise of hedging and portfolio management and those type of things. So anyway, so that's the big deal in what we're doing. So all right, so let's get into tonight. It's pretty sparse, but let's get into a couple things. So I said I don't really have any of the, I guess what's the best things to put up here. There's not a lot of notes here, but one of the things that popped out, and this will lead me into a couple things, is the Treasury is starting a big round of auctions. This would probably, outside of, maybe we don't need news, the Treasury auctions might be the thing that we need to be focused on anyway. And maybe there's a reason that everything's scheduled like it is, and meaning that there's very sparse any kind of macro news coming out. So we're going to be able to focus on. So let's just talk about what's coming out. As we've got 48 billion of a 3-year note, we've got 40 billion of a 10-year note, and then we've got 24 billion of a 30-year note. When I wrote this number down, I have to share with you the thought when I was preparing for tonight's deal is, why would if rates, okay, everybody's starting to price in rate decreases next year, right? And I've been telling you for the last year, they're not going to drop. They're not going to go down. I can't say ever again, but I'm going to say for not longer for, I won't even say the term, okay? Not higher for longer, I will say it. It's going to be just higher. And I'm going to go in a couple things. But let's break down this Treasury. And I get a little bit of a rant that I think this is as good as night as any to put something out like this, since it's pretty quiet on the news part. But there's of this auction, why do you do 24 billion? That's a decent number of a 30-year, and you're cranking out 10 years 40 billion. So why are you locking in these rates at, we'll call it 470, right? Roughly. We'll just go round numbers. So why are you, the Treasury, locking in these rates? And I'm thinking for an obvious reason, is because this is a good rate. They may not see these rates for a while again. And I know, everybody plays the game and the Fed's going to do this and that. I'm telling you folks, and I've been telling you, that the Fed's out of that game. That's not the game anymore. Everybody's still thinking we're playing the same game, and we're not. I talked to you, I haven't mentioned this for a while, but the sea change that is happening on this in the financial world, and the sea change is quite obvious, at least to me, is that, and I'll just go back. I'm an old guy, so I started in 1979. Rates went up to 25%. It took over a decade to come down to 6%, which was all of a sudden we get into 2000. So it took a couple of decades to get down to that level. And then we saw the GFC, we saw all these crises, QE, basically everybody trying to become Japan and blow up the deficits and everything, so we can run at 125. I think what Japan now is 235, 250. Don't know the number exactly of GDP on debt. So everybody, hey, we can do it. If they can do it, we can do it. And we got into all of that whole scenario that we played through the pandemic. But out of all this, and like I've been telling you, what we're seeing here is that the events that really are happening is the normalization of interest rates. I know you guys have heard this from me. I just need to try to put it all together here. What we're seeing is this normalization of rates, and this is the deal. As I think we lived in a world where you could bring bogus deals out to the market. You could bring all these sort of .com kind of pieces of junk to the market because the financing was so cheap. So all of these businesses were launching at these really cheap rates, and then they fail and all that stuff. Remember all the meme stocks from the pandemic? I remember some millennial YouTubers and we'll say and Twitter folks. I got blocked from them because I'm trying to tell these kids. I go, hey, folks, these are not good companies. They had this much revenues and all this stuff. Said no, these are really bad companies. And then when they all failed, and when we came in through 22 and everything got crushed, and Kathy Woods and all of that, right? They finally had to pay the piper for all the gibberish that they were feeding and what they were believing. And so what's happened now is, as we go forward, this is my opinion, as always on this channel, is that I think what happens is all those bogus deals, you better have a really good deal. Because if you don't have a really good deal, it's not going to fly at 5 and 6%. It just won't work. You might be able to pull off a deal, get some VCs to come in and finance some deal because they can do all this stuff. But now this is real stuff now. So, there's I haven't had a chance to get engaged. One of my associates was involved, but there was a big, basically ChatGPT. There's a whole next level of AI coming out. There is a world moving forward. And I'm just telling you here, that's why look at the Russell today. Russell down 1.29. It just got crushed after having a big week last week. It was a rug pull on this thing. Why? Because the 10-year bounced back after the STX buy signal yesterday. So I'm going to try not to get too convoluted here. But the bottom line is what we're seeing is going forward, you're going to have to finance deals that make sense, and they better be able to cash flow and pay for this debt, or they're never going to get off the ground. So it's very likely there's two ways to look at where we are right now. There's a whole group of people like we're going into recession, and these high rates are going to crush, and all the crushing demand and everything like that, and cost of money and all that. I don't know if that's necessarily the right way to look at this thing. I think it's very possible you could look at it that there's some more positives here because the economy ran fine at these rates. I told you before that we're at about a 5.5% is the average yields for like 35 years. We have these spikes above and below, but we end up where we are right now. And even when I go back to in 1975, I started in real estate business. That's where rates were. They were 5, 6, 7%. They cranked up a little bit as obviously we came in 1980 and went through the roof. But what I'm telling you is the markets will run fine, the economy will run fine, and this whole sea change of going from these different levels over decades, we're now into, I believe, probably a 10-year, 15-year cycle that we've entered into. And, electric cars aren't going to save anybody. The Cybertruck isn't going to make any changes to society and what the cost is and everything. So we've got a number of things. I'm trying to get out of this loop, folks, but I knew this was going to be dangerous for me to touch on because I could go on any one of these trails and probably spend a half hour on it. And, but we're just looking at what to go forward from here is going to be much different in the past. And to expect the Fed to lower rates next year is absolutely, if it happens, it happens for a whole lot of bad reasons if that happens. And that's because something got derailed. But it doesn't look like that's what's going on out there. So I would think to bet on those kind of decreases in yield would be bad. I wouldn't argue that we'll see fluctuation in yields. And I've showed you every night here in the last couple of weeks that the forecast as we come into 2024 is what looks like softer yields coming in. Doesn't mean they're going to collapse, but we're going to get maybe some some kind of rally in the bonds. Maybe there's a little bit, but my point is that everything's going to be different. So I'm hoping to make a conclusive point here is that what I would expect to see with all of this supply that's coming out, I think the Treasury's looking at this 10-year, these 30-year auctions as we better lock this stuff down. This is where this whole rant came from. And if we don't lock this down, then we're going to be in trouble because there's probably higher yields. I've showed you before, didn't really bring it up last night, but have 6 and 7% projections for the 10-year. I believe they're still valid. And if, so there's a lot of upside in yields, and it doesn't necessarily mean that there's a disaster coming, but what it does mean is that things are going to be different going forward. And that's my point. And I think ultimately productivity will save us. And I'm a believer in, some people think, that AI is a bubble, all that kind of stuff, like another .com. I don't think AI is a bubble. I think AI is very real, and it's going to change everything we all do in significant ways, and it's going to make productivity ultimately climb to the roof. So that's the hypothesis. We'll leave it at that. So just to, and I should have mentioned this earlier, so this will be the final. And what we do on Monday night, I'll go through the Portfolio Expert dashboard. I want to show you where the rotation, where things were coming in last week from the standpoint of some of the buying that we had come in that I discussed last night. And then on Tuesday, we'll go through the output from the run that's going to be happening tonight. But we do have, there's still, and I didn't total these up, but I would tell you roughly, I'm going to go about 1,600 plus earnings reports still coming out. Wednesday and Thursday, mostly banks. From Disney comes out on Wednesday, not that that's a bellwether of any sort, but there's a lot of banks coming out, and we had 305 reports today, nothing material. And then Tuesday, tomorrow, we've got 379, and Wednesday, 539, 609, and 83 on Friday. So we still have lots of earnings coming out. So this earnings season is rolling pretty heavy here right now. And so I think that will be, that between that and the auctions, I think that's what we're watching. All right, folks, I haven't looked at your notes here. I guess maybe I got one more thing, just looking at a couple comments here before I move on, is that, the other thing that's probably going to be around for a while is inflation. They're not going to, I don't think they beat this thing. I don't think they beat it down. If nothing else, I think what we went, they keep telling you 2%, 2%, 2%. And I watched some of the ECB, some of the European folks, other central bank comments from the talking heads from other central banks. And they're just telling you, we've got to beat this thing. We've got to beat this thing. And I think they're going to have a hard time because there are some things that are getting embedded in. And if you go on YouTube Shorts or TikTok, you'll see all these videos. People are showing what groceries cost a year ago to what they are now. And we're like 200% some of the stuff, the same items. And not only that, they're downsizing what they're selling you. So this is pretty ugly stuff. And so stagflation, like I said, we could go for an hour right here. So I'll get into the technicals. There really isn't much to talk about there either, because it looks like a very quiet week ahead of us. Maybe we'll get some volatility, but it doesn't look all that exciting when from the view I just saw when I was getting ready to come live here. So just see if I got everything on my notes. Yeah, so I was able to rattle on for 20 minutes. So that's pretty good. So so I just look at a couple of comments here, and JMI, you need cheap energy to break through for productivity and AI to work. I'm not sure about that, but maybe so. That's the other thing, probably. If they figure out to build nuclear reactors, then this whole thing is easy. Electrifying is a good point. I was watching, I think it might have been I watched some of it, not all of it, the interview with Joe Rogan and Elon. And Elon's claiming, yeah, there's plenty of materials to build all these batteries, and that's not really a good narrative, And of course, if you're a major owner in Tesla, why wouldn't you say that? You always have to be careful who you're talking to when you're asking him opinions like that. He did point out that the biggest element really is nickel, and that becomes a problem. And I think the other issue with the whole electrification thing is you got to have electricity to put it in the batteries. So they're going to have to embrace some kind of nuclear power. They're not going to get it through wind and solar. And I know Elon saying take us 100 square miles and run the country on it. Nice try. Don't believe that. But maybe it's possible. I'm not a rocket scientist. He is. But the point is that you're going to have a hard time finding 100 square miles and to develop that. So, hey, nuclear is a lot easier. So we'll see what happens. I always tell you, I was in Phoenix the other day, and I can tell you I saw a lot of Teslas down there. This greenest city in the United States of America is Phoenix, Arizona. Anyway, folks, let's go to Portfolio Expert Dashboard, look at the data, and I should be able to get to the rest of this pretty quickly. Wrong screen. We want to go to WaveTech. All right, so here's the database. I went through the numbers last night as far as what we got on the intermediate, but this is the Portfolio Expert dashboard here. We're running 43% of the equities in our models are long. We've got 39% ETFs, about 40%, and the overall database with everything combined, which is a little more expansive. This is a very highly focused database. And so it breaks down each entity. I could actually go in and bring up, let's just do it for a second here. I go to mutual funds, and you can see what the percent bullish was up around 61%, and then it dropped down. So let's go back to equities because I want to show you some of the sectors and where the rotation happened. That's typically what I'm doing on. Let's take a look at this. We come down here, sectors, we saw across the board buying very light. So we only saw the database on the intermediate go from around 32% up to 39% on the overall. And so a little bit of a bid coming in. I was trying to look through the groups and see which groups were starting to get a little bit of flow, a little bit of a bid on cyclical consumer goods. Everybody got real optimistic last week, and it was interesting because we had this huge bid for 6%. As I told you last night, this thing, there's no vertical move here to an ATH or anything coming here at all. We're really looking at something much, much different, a lot of work to do, a lot of obstacles. And when we look out the front of the car, look in the rearview mirror, doesn't look too bad, but looking forward, there's some things that are starting to show up here. But we got cyclical consumer goods kicked in. I was looking through these numbers. It's interesting that reinsurance, 75% of those stocks are long right now. And then we got this dark green area is the new buying. So we got 10% of the sector buying in the REITs, and then we got looking, there was something here like diversified industrials is 100% long. That's kind of interesting. And then really nothing that I'm seeing here that is standing out. There was a decent bid coming in here, office furniture. So there is a little bit of a dialogue going on from the standpoint of I'll just come back up for a minute. There is a bit of a dialogue going on, and I've been talking to you about how industrials are starting to come back. That's reflective in what we own on the database. And then there's also there's a lot of talk of people coming back to the offices. So the whole CRE thing that you don't hear about anymore very much because it really was never a thing, and it still is not a thing. There are some issues, no doubt, in commercial real estate, but it's not material. So let's get back to the technicals, and now let's go to the S&P. All right, as always, we start with the hourly chart. I mean, this thing flatlined today. If you look at this, and the projections are just completely flat. A lot of times when you're using an algo like the auto regression, when you're looking back 150 bars, look at this. We had a flat period here on Thursday, then we got a ramp up on Friday, then another flat. So we got a lot of flats, and even if I blow this range up, you can see the algos they're just sideways. So pretty interesting, unorthodox type pattern, I would call it. Nothing really we're going to be able to garner from looking at the hourly charts. There's nothing here other than noise and looks like sideways range. Even if we took what's being forecasted here, 43. If we look at the down in here, we did get to fib target 2 on the hourly chart earlier today, which was 64. We printed right to, I think that was the number. Yeah, it went right to 64.50. So pretty accurate projection from the indicators down to that level. We bounced out of there. But look at this. As we look at the hour, more of a little bit of a downward bias. You're not going to get much from here. Basically, sideways chop. So let's go ahead and take a look at the daily. Hopefully, it'll give us a little better look here. So this is what we were talking about last week. We had these Fibonacci targets back here, and we had 3 levels: 43.17, 43.91, and 44.37. So far, the high print's been exactly 91, so it was a very good projection. We're kind of holding right here. I almost named tonight's video, markets are trying to stall here. I don't think there's much, but I do think we probably, and I talked about this last night, that we come back into this range a little bit, and there's really not much there at all, but everything is flattening out here, which is sort of interesting in that we've got all these big auctions coming. We're loading up. They're basically loading the truck up and dumping it. I've told you before, and we'll go talk a little bit about the possibility of yields still kind of staying sideways, staying up and elevated here, and that all these indexes are really going to consolidate after this little run up that we had. So there's really not much talk. It looks like the algos want to print this thing up into Friday. You can see the angle of attack is pretty good, so that'll be interesting. I'll try to cover this the best I can on tomorrow night, Tuesday night, and Wednesday night. So as we finish, I'll try to keep in mind that we're not going to be around I won't be here on Thursday. will be at the seminar, those of you that are coming. All right, so we're on the daily Nasdaq, same configuration. We still haven't hit fib target 2 here. 15,356. So far we printed 15,257. There's about another 100 on the upside. Like I said, we look like we got Thursday, Friday. The algos are suggesting we're going to get more strength here. Whether that happens, we'll see. But it does look like, as long as we're staying well above this 10-period moving average, that this algo is going to stay fairly bullish. But even the 21 and the 40, so PPM 2 and 3, look pretty good. The 200 is trying to roll over. I think ultimately, if we go down the trail, these forecasts going out 50 days are not really that valid, but at least this angle of attack tends to stay in place. So we're going to continue to stay up and probably climb above 15,000 here. But most likely we get in just more sideways chop. Maybe we pull back into the moving averages, 14.8, 14.6, something like that. But it looks like there's still a couple of days bias. And then we've got the 2 fib targets out there right now on the daily on the Nasdaq. We're looking at 15,356 and then 15,563. It's interesting you invert the numbers from, almost 56 is the upper target. So this pattern just looks like we're just going to end up consolidating, probably chop through here. Ultimately, this 200-day moving average comes into play. It sort of did back on the 26th of October, but this slope is going to be where the positive trend and longer term trend comes in. That 200-day is going to be very similar to the 200-week. We won't visit the weekly charts tonight, but that's going to be your big number to watch. And it's probably, right now we're up at the upper end of this range. Like I said, my expectation is we come in, at least test this moving average, and if we go out to that second and look at third week of November, potentially looks like we're probably going maybe to set up a right shoulder. We come in and test these moving averages, maybe do some fib retracements, and then possibly we'll get into a more positive configuration. But I think this is really just right up at the upper end of this top end of the range that we printed up, and kind of trying to retest the September highs up in here where my cursor is right now. I think that's really what we're working on, and that's what the fib targets, and I mentioned this when we got the fib targets, is this is really signaling a retest of those highs in October. And I don't think we get beyond that. Certainly when we looked at the monthly and the longer term stuff last night, we didn't see any indication of that as well. So a couple things here. Bringing up RTY. RTY's got a decent slope. This pattern that's being projected here, is it real? I don't know. These are just forecasts, but if you have these indicators, you can watch these. It's amazing. They're reasonably accurate going out a ways, but this configuration makes sense. Like I said, we get a right shoulder and then maybe back up. But that was interesting, the markets actually printed up to the fib target 3 here on the Russell, and then we get a pullback here today. I think Russell's probably going to lead us back into maybe the 17, 18 level, setting up that right shoulder. Maybe we get a little bounce, but we stay within the market grid from that standpoint. And I really didn't set up well, did I, on the market grid on the S&P when we were over there. So I kind of flew by it. So I apologize for that. So let's take a look. Let's do something I think Jeff suggested, but I think it's probably a pretty good something to look at here. Is the maybe time to look at the Russell Nasdaq pair again. We haven't looked at that for a while, and I believe this is right now a we're probably looking at I just want to see what we're on here. So this is the daily. That's why I thought just a weekly time frame here. But we basically have made a new low from way over here back in 2020. So it looked like this is a trade that I was talking about where the Russell, I think the only way that we get, let me rewind that whole statement. The only way that we get a new ATH across the board is if the Russell can kick in. And I don't see how that's going to happen at the moment, meaning the Russell has to outperform and start to lead the way. A lot of trades, those older traders out here, you almost need that rotation into those charts. What's the saying right now is that if you want to see the real economy, look at the Russell, right? And if that's the case, it's really not as bad as they like to make it sound like it's going to be. But these companies, if this spread is not quite ready to turn around yet, but I think it's probably a good idea to keep a watch on it. And this will be probably the element that would tell us that there's something more positive happening. I think right now everything on all of these indexes are just locked in these trading ranges, and you got to be able to trade up at that upper end of things. The algos seem to come in and give liquidity when we start to get up in these range. And when we were printing down in that 41 handle the other day, they were providing long liquidity there. There was some buying coming in, and then when we get up a little bit higher than where we are now, maybe into the 44 handle, there's probably going to be some selling, some providing of some liquidity as we come into that range. All right, so we'll go to the 10-year, and like I said, they're loading it up. It looks like tomorrow's the 3-year auction, 48 billion. That'll get sucked up pretty good. 10-year probably will too. And as I mentioned earlier, they're putting out 40 billion on the 10-year at 7. We'll say 7.6, 7.7, and then on the 30-year, it's going to be just a touch higher. But they're locking these yields in, and I think this is probably the best way to put it. I think this is probably acknowledging, and we'll have to watch these auctions go as we go through this final quarter, because they got a ton of money to raise, right? What was it, 680, 700 billion? There's some serious money coming down. So this is one tranche here. What do we got here? About 115 or so, 120 range. So we've got 6-7 more rounds before end of December. And folks, that's in 8 weeks. I believe that is for this final quarter refunding that's going on. So this is going to be pretty heavy duty. So I think we'll probably see everything rebound. You can see here on the daily, I talked about this. It looks like we're going to stabilize, maybe try to move back into these ranges here, but we're going to end up topping out here now, maybe 475, 480 on the 10 possibility. I think we saw, look at this Fibonacci. I'm just going to turn the clock back for a minute. Is back on October 27th, these Fibonacci targets came out, and they were projecting 464, 450, and 442. And here we are, yesterday's price, we got to 448. So we went just below that fib target too. And then it bounced back. As I said, we also got an STX buy signal, which suggests we go sideways to positive for at least 2 to 3 sessions. But that upward sloping 40 period moving average, I thought that was going to hold. Obviously, it broke through and then it just rebounded back. I'd even argue that it was a mistake by the markets. It was incredible value. So everybody saw that rally. They sold whatever they could there. And the result here is that we've got probably going to try to come back into that wedge formation that I've been talking to you about. I'm just going to bring this up a little bit here. This rising 40, we should get above that. I suspect if we can get a higher close today, stable on today, meaning Tuesday, stable on Wednesday, we'll probably get this market grid to turn up and set up some kind of mini bottom here and then start to trade back into these moving averages. So, back to what I was talking about, if we started to flatten this thing out and just look at this is a daily, but let's go to weekly real quick. This was the number I was talking about. We went below the 10-week moving average, and we had this pretty decent PPM on the upside. Even if we look here, I've been pointing this out, even if we go into November, even though this PPM it looks like it's declining, is that signaling lower prices? No, you can see the moving average, the forecast, the WTAR forecast is telling us that we're going to round out, and this is what I was saying, we should kind of follow right along this curve here and probably stay around 460 should be the bottom. We probably trade up 70, 75, and we'll see if we can get an upturn. This is the weekly, but there's decent numbers as we look out for several weeks. And even the PPM2, PPM3, they're all in trend mode. So we're most likely going to consolidate, run along this 10, maybe trade on either side of this thing within whatever market grid is being forecast at the time. So crude oil next. I see Jeff was saying the Democrats need lower energy prices to even have a chance. And look what's being forecasted all the way into April of next year. We're looking at some lower prices, but I showed you last night, when you look at the weekly chart, which this is, it looks really negative. But once you go to monthly, it just tells you stable. We're pretty close to the bottom end. I've been advertising that around $70, 70 to 90 is the broad range, and we're probably going to hang in there. It does look like the 10-week is going to get fairly aggressive as far as being a rejection point here in the next several weeks. This is a weekly chart, but when we look at the 200, it's at the $70 level. So maybe we print down to the 70, and we'll see what if we print down there, we'll see what kind of forecast we get going forward. But overall, this just looks like we do have some downward pressure here for a little bit, and then it's going to bottom out as we come in to December or so, and we should come back. What will be interesting to watch here, folks, is to watch this 40-week moving average. 78.54 is that number. So if we get below that, then maybe we could head down all the way to this 200. This is a 200-week, not a 200-day. So a 200-week moving average would put us right at the 200-day. The forecast, there's really nothing there. And like I said, I'm just going to flash you over to this monthly chart, because this is the game changer. You're looking at, once again, down around 75.90. I think we hang out there, and the forecast going forward on the monthly is good. And by the way, one of the techniques and things that I'll talk about is how to determine what is the primary trend, or what is the most important chart when you're doing multivariate trading. That is going to be one of the key elements, because once you understand that, that's why when we look at the weekly, it looks like, oh man, these things are really going to come down. Then we go look at the next level. We look at monthly, and it's like, wait a minute, there's lots of stability. The pattern that's there really looks like maybe a little right shoulder. There's no forecast for anything higher, but certainly maintaining around 75. If we spike down to 70, it would be a buy down there. All right, this is going to be pretty boring. Gold's going to be a tough one to cover here as we go forward. Still good support here on the 10-week moving average. We're looking at 8 right now. Make sure I got the number right. We're looking at 1955. This is a boring market, folks. 1940 will be the extreme and about 2010, 2015 on the upside. And we're just going to work that range. This is a monthly graph I got up there. But if we bring it back to the weekly, I mean, this thing looks like a dead patient. This was an EKG. You can see it's just dying down as we go in the backside. So really not much there. Some potential to come back on a weekly and get back toward the below 1920. But overall, just sideways, pretty boring. So keeping with the weekly as we go into Bitcoin, nothing's changing on these charts. And I don't know if this whole week is going to be as boring. That maybe I picked a really good week to do the seminar, because that's going to be helpful. Yeah, poor Peter, huh? Poor Peter Schiff. Just can't get any satisfaction. But the bottom line here is on Bitcoin, like I've been saying, I think we go sideways toward this moving average. Probably bottom end 32.5 is probably it. And on the upside, we're probably hanging 36.2, around that range. I think we consolidate here. I don't think, last time we looked at the dailies, they were trying to weaken, but they're almost, look at this, they're just flatlined. It's a crazy pattern. It looks like maybe we could come down and test this 21, but it's rising. So right now there's 3 fib targets that came out tonight actually on this bar. We're looking at 33.9, 33.122, and 32.6. And I'm just rounding things off to around 32.5 on the downside. Upside, there's really no upside other than looking at market grid, looking at some numbers that don't really necessarily have any relevance because there's no VIG right now. You're seeing daily momentum just drop off here to zero, and we're seeing this in a lot of markets, folks. Okay, folks, we'll call this the end here of the show. Appreciate it as always. I just want to say, just real quick to summarize everything, is a lot of these markets. I mean, this looks like one boring week ahead of us, and it's interesting because after last week we had this constant bid, and if you got in its way, they took your money. It doesn't even look like there's much probability for any of these markets, actually, for any real retracement or rejection off any numbers. Still think on balance that I covered last night, S&P could see a 44 handle before it's over. We might see these 15,000 numbers that I talked about on the Nasdaq. So, I mean, that looks like where we're likely to be here. So, yeah, I think all this stuff, like just looking at a few comments here. Yeah, just looking at a couple comments. Yeah, and I would agree with M. Stone. No way Bitcoin's going to be that flat into the end of the year. There's an upward bias on intermediates, but it's going to be interesting to see how things play out. I mean, think about the things we don't hear. Just in closing tonight, think about the stuff we don't hear about anymore, right? When's the last time I can't even remember last time I heard anything on the Ukraine, and even the Israeli situation is. It's like quiet, I think. I don't know. Maybe I'm just not looking in the right places. But most of anything hanging around financial media, there's not any impact of these wars right now. There doesn't appear to be any trigger points, I guess is what I'm getting at the moment. So maybe there'll be anything's possible when you have geopolitical risk going on, but it doesn't look like to me that there's any volatility trying to show up even. So we'll have to see how things go when as we go into the weeks ahead. But folks, looking forward to seeing everyone for the seminar on Thursday. Should be, like I tried to explain in there early, I think it's a really good format that's going to really help a lot of folks. That's the plan. And there may be future events like this, and I still want to do a live event where we're all together. I'd love to meet a bunch of you folks. That would be really fun to do. And I'm still targeting Vegas for that event, and that would be fun. But like I said, this is the cheapest way to do this seminar right now. Do it online. Nobody has to travel and take all that out, because once we start adding in travel and hotel stays and food and drink and all that, going to a conference, it gets fairly pricey. But they're awful fun to be involved, be with everyone. And we haven't done a national conference, I think, since 2014. So that'll be really fun to do. So hopefully we can pull that off. I'm still hoping for next spring. Maybe not even spring, but maybe February, March. That might be kind of cool to do, but we'll see what happens. So thanks for watching as always. Remember, Tuesday night, Wednesday night, final videos here on the YouTube channel. See all you folks that have signed up for this seminar on Thursday and Friday. Should be fun. All right, folks, have a great evening. We'll see you tomorrow. Yeah, Robin Hood, that was one of my mentors, said my very first week on the floor, never sell a quiet market. That's an old saying. Thank you, everyone. Have a good day trading. See you tomorrow night.